What's up traders, welcome to Failure to Displace. In this video we are going to be looking at what makes a high probability macro trade versus a low probability trade. Two entries this morning in the London macros on EURUSD. One was a break even, the second one the high probability trade, netting a really nice 4.64R. So let's jump into the analysis now and see the difference between these two entries and what we can learn from the session. So my current trading plan is trading the two London macros. The first macro is 2:33 AM to 3 AM and the second macro is 4:03 AM to 4:30 AM. There is some questions over whether these are valid ICT macros or not. All I will say is that I've been backtesting these for over a year now and forward testing these since the beginning of this year with good success. So I'm sticking with these times, irrelevant of whether they're actually ICT macros or not. They seem to produce momentum, so it's worth at least backtesting this for yourself. The instruments that I'm trading in the London macros are EU and GU. So this is EURUSD and Pound USD. And my setup is going to be identifying higher time frame points of interest. So I'm looking at the 1 hour and the 15-minute time frame to identify potential areas where my setups may occur. When we reach these higher time frame points of interest within my macro time windows, I'm looking for a 1 minute sweep of liquidity, and that sweep of liquidity needs to create SMT with the Dixie. So I'm monitoring two charts. I'm monitoring the euro or the pound chart alongside the dollar chart. With this SMT, I'm looking for an inversion fair value gap to be created by an engulfing candle close. So this engulfing candle must close over the opposing FVG. This confirms an IFVG, so an inversion fair value gap. Really important points in this stage are confirming SMT with the Dixie and the engulfing candle. It must be a clear close. So we're not looking for small, questionable closes over a fair value gap. We want a large engulfing candle. The entry is going to be on the engulfing candle close. The stop loss is going to be at the swing high or swing low beyond the inversion fair value gap. Take profits fixed at 1 to 2 RR. I will be moving my stop loss to break even once we hit an initial draw on liquidity. So for this I'm looking for some low hanging fruit, a swing high or a swing low that will act as an initial draw on liquidity. Once that liquidity is taken, I'll be moving stop loss to break even. Again, this is something that I am still refining. I may adjust this just to a set and forget strategy, and also we could look at taking partials instead of closing the entire trade at 1 to 2, because I am seeing that when we do get on the right side of the market, these trades do have the potential to run quite extensively. We'll see that in the charts this morning. Notes: while we are in the trade, I'm monitoring for an opposing SMT. So if we are in a bullish trade, in a long position expecting higher prices, and then we see that we are developing bearish SMT with the Dixie while we're in the trade, this may be an indication that we need to collapse the trade early as price may reverse. When we're looking at SMT, this is how SMT will present itself. So we have the euro and the pound on the left and the dollar on the right. So these pairs are inversely correlated. So in normal market conditions, when the euro or the pound is making a higher high, the Dixie should be making a lower low. If we see the Dixie making a higher low, then this is an indication that there is manipulation going on between these two pairs, and we should be looking for short trades. The other variation of the short trade would be the euro or pound making a lower high, while the Dixie makes a lower low. Again, under normal market conditions, we would expect a higher high here, because these pairs are inversely correlated. So again, manipulation is present. If we see this on the charts, we can look for a short on the euro or the pound. Longs are the exact opposite. So when we're looking for longs, we're monitoring the lows on the euro and the pound compared to the highs on the Dixie. Quick run through of my actual checklist. As I'm on the charts, I'm identifying a higher time frame point of interest, looking for a 1 minute liquidity sweep, creating SMT with the Dixie, looking for an opposing fair value gap to be filled, creating a IFVG. This is going to be created by an engulfing candle close above the FVG. So this confirms the IFVG. The entry is at market on the engulfing candle close. So I'm not setting a limit order waiting for a retrace to the IFVG. I'm just entering at market as the engulfing candle closes. Stop loss is beyond the swing high or swing low. The take profit is fixed at 1 to 2 RR. Trade management will be going to break even after taking low hanging fruit draw on liquidity, and we're monitoring swing highs and swing lows while we're in the trade, looking for opposing SMT as an early indication to close the trade. So that's a quick breakdown of my trading plan going into the London sessions. If you found that useful, please do leave the video a like and also a comment down below letting me know if you've got any questions regarding this. With that said, let's look into today's price action and the two setups that presented themselves in the London session on EURUSD. So to start the analysis off, we're going to take a look at the daily time frame just to try and establish a higher time frame bias. And then what we're looking for is we're looking for our daily to start aligning with the hourly chart and even the 15-minute chart as well, just so we can pinpoint those points of interest within the macro where we would potentially be looking for our A+ macro setup. So here we are on EURUSD looking on the daily chart. We've been looking at this swing low all year. So since the beginning of January, I've had my eyes on this swing low, and it's just finally been tapped yesterday. So what we had done to establish why we were looking at this swing low is we'd taken relative equal highs. We'd then failed to displace outside that range. So we'd closed back in the range. So this here, this deviation outside the range, as we are closing back in with displacement, our eyes are on the opposing side of the range, which would be this liquidity here. And you can see we were leaving bearish fair value gaps on the daily time frame, indicating that we were displacing and driving towards this low. We've since, on Monday, created relative equal lows. Tuesday, yesterday, we pipped through the bottom of that low and then rejected. So again, we've got another failure to displace here at this level. We have taken these relative equal low liquidity just by a point or so, but we've closed back in the range. So we've taken external liquidity here, which means that we'll probably be seeking internal liquidity to try and get some more momentum to run further down if indeed we are going to displace below this low. We may close over the internal liquidity, which is this bearish fair value gap here, and seek another swing high up here. So we need to see how price reacts at this level. So what I'm thinking coming into today's price action, so today is Wednesday the 7th of February, is that this bearish fair value gap is going to be our target. This will need or potentially want to be rebalanced. And if we are bullish, we may close straight through this, but I'm expecting price to draw up into this fair value gap at the very least. So I've got a bullish bias coming into today's price action. Potentially a higher time frame bias running this high if indeed we do close above the bearish fair value gap that we've got here. So coming into the London session, I am looking at buys, specifically aware of this fair value gap. So we're now on the hourly chart, and we can see that as the day has opened, Asia has pushed up into the daily fair value gap. So this large green area is our daily fair value gap. We're currently tapping into that. We've left displacement through the Asia range, displacing higher. We've taken yesterday's high. We are respecting this bullish fair value gap here. Having broken this high, we are now in bullish market structure. So we've broken the high. We're not displacing through the high, but we're not displacing back into the range either. We're kind of tapping the bottom of the daily fair value gap, consolidating up here. If we're going to continue respecting this hourly fair value gap, a potential area of resistance would be this order block here, which is an hourly order block created in the London session on Monday. So there's our potential area of resistance. If we are going to come up into the daily fair value gap, we may find some resistance at this point. Then ultimately we do have Monday's high that we put in on the London session as a external point of liquidity. So being bullish, we're looking for basically a draw up into this area, a level of support, on the hourly would be here, which would be this bullish order block. Obviously, we do have the fair value gap that we're currently respecting. We also have another fair value gap inside our hourly order block as a potential area of support as well. So if we got a retracement in the macro back into this area, we could then look for longs. We've created relative equal lows here on the hourly chart as well. We've got a potential draw on liquidity into this hourly order block. Let's drop onto the 15-minute now and just see if we can refine this further. So we've got bullish price action leading towards our bullish bias on the daily. See if we can get this on the 15. So here we are on the 15-minute time frame, and we can see the open of London at 2 AM has pumped us right up into consequent encroachment of the daily fair value gap. So this dotted green line is 50% of the daily fair value gap, just under that hourly order block. So our time from the macro is 2:33 when we're looking for an entry. So what we have left is we have left displacement higher. We've left a nice big bullish fair value gap and this bullish order block. We've obviously respected that hourly fair value gap, which has driven price higher. We have the hourly order block below us, but we do have this 15-minute order block now as a potential area of support, leading us into the hourly order block. So what we'll do at this point is we're going to go jump onto the Dixie as well, because I'm wanting to see confluence with the Dixie. So because I'm bullish on the euro, I want to see the Dixie being bearish. So here we are on the daily chart of the Dixie. We're going to conduct the exact same analysis on the Dixie. The Dixie has just taken liquidity here, so we had relative equal highs all at this point. We've swept that liquidity into a fair value gap. In fact, there's additional liquidity here that's just been taken as well by a couple of pips. And then we've failed to displace any higher. We are now closing back on Tuesday into this range. So again, we're seeing a failure to displace over these highs. Therefore, we can expect Dixie to run lower, seeking some form of internal liquidity. So we have a fair value gap and a fair value gap both here. So this does support the bearish bias again. We have swept external liquidity, swing highs on the Dixie. We are closing back inside that range. So this supports the bearish thesis. So here we are on the hourly chart of the Dixie as well. So we can see the relative equal highs that we'd put in up here, and then we've had this break of structure lower, leaving displacement lower. So again, this is showing bearish momentum on the Dixie. We're closing over bullish fair value gaps at this point, so potential inversion fair value gap that was created through the London session. So we've closed through this on the hourly chart. So again, if the Dixie is bearish, we expect the euro to be bullish. Nice draw on liquidity would be Monday's low. And then likewise, we have a very large inefficiency that we created. This was a news drop, I believe, on Friday. So lots of area, lots of space for price to collapse on the Dixie, which again would support our euro trade. So here we are now. We've established our bullish bias on the euro. We've established the bearish bias on the Dixie. So those are working as we would expect. We are now onto the 1 minute time frame on euro. I've got the euro just above us. We've got our hourly order block up here and our 15-minute order block down here as potential areas of interest. We have the Dixie below, which is what we're going to use to analyze SMT. So again, apologies if this is a little bit compressed and it's hard to see the candles, but I do want to show SMT while we're looking through this, and we'll see the difference between an A+ setup here and a pretty average setup from macro 1. So macro 1, there is a long trade that I took this morning. We'll go into the macro. You can see we're just under this hourly order block. We're very high up in the range, so we are at the daily high at the moment, coming into the macro. So we've had no pullback, but I do have a bullish bias. So this initially just got me concerned. It's not most ideal situation to look for a long at the high of the day. You would prefer a pullback into a discount before looking for the highs. So the macro's just opened. We've swept a low. Let's try and zoom in on these a little bit. Likewise, we've swept a high on the Dixie, so it's all working as expected at the moment. So we're taking another run at this high. So I'm watching this. The Dixie has not taken the low yet. And the euro has not taken the high. We are looking for bullish SMT. So we're watching the swing lows on the euro. And we are watching the swing highs on the Dixie to signify our bullish SMT. So we've taken this low on the euro. We've taken the high on the Dixie. So again, there's no SMT here. This is acting as we would expect. Continuing lower and continuing higher on the Dixie. At this point, we have an engulfing candle. So this, as soon as I see engulfing candles, it starts me looking for SMT. And we can see within this 2 minutes of price action, the Dixie created a higher high, whereas the euro created a lower high. So this candle should have been a lower low on the euro. So this is showing that the euro has some strength in comparison to the Dixie. Both have closed over inversion fair value gaps, or opposing fair value gaps, confirming an inversion fair value gap with an engulfing candle. However, so I did take this trade. I took a long on this candle close here. I took a long trade with a stop loss below the low. My obvious target is 2R. And we have low hanging fruit here. So we will take our stop loss to break even as we sweep this high. We can see that this is not high probability. So I did take this trade. It was part of the trading plan in the macro. However, we are not in an hourly point of interest here. We are in the middle of the trading range, in the middle of a consolidation. Essentially, we've had no pullback into an hourly point of interest or a 15-minute point of interest. And I'm taking a long position right at the very high of the day. So this isn't high probability. I'm not taking a long in a discount. I was looking at this range. Ideally, you would want to be looking at taking a long position anywhere below 50%. So inside this order block, optimal trade entry and 50% are just down here into this area. So we do have a region of support here. So it would have been much nicer to have a pullback into here. We've created relative equal highs as a draw on liquidity. We've not had a significant pullback. So this is why this is not an A+ setup. Our criteria are met. We are trading in line with our bias. So we've got a bearish bias on the Dixie. We've got a bullish bias on the euro. We do have an engulfing candle. We've got very minor SMT just over these 2-minute candles. So our criteria are met. And we can see that price does eventually get us to break even. So at this point, having swept that, move my stop loss up to break even. And we're risk free, hoping for this to travel to 2R. We've instantly hit the hourly order block, so we're going to find some resistance at this point. We can see Dixie has failed to take these lows. whereas the euro has taken the lows. So we are creating bearish SMT at this point. We would have expected Dixie to have ran these lows at the same time that the euro did. Currently on this 1 minute candle, it has failed to do that. Dixie begins to reverse. Likewise, the euro has now started reversing. Dixie now creates a new low here. So we've got a lower low at this point. The euro has failed to create a new high. So we're continuing to make bearish SMT all the way through this price leg. We begin consolidating, a little bit of a poke up. Unfortunately, the macro closes and then we come back to our entry. So this ended up being a break-even trade. There was opportunities seeing that we were generating bearish SMT while we were in this trade after taking these highs. Opportunities for me to take profit on this, potentially close it. I decided to leave it alone and didn't take any profits, but this for me is not a high probability trade because we are not in an hourly point of interest. Let's jump over to macro 2 now and look how that trade compares to this one. And trade 2 in macro 2 I believe is a high probability trade. So here we are just prior to macro 2 opening up. You can see that price, after we hit break even, did aggressively move lower into the optimal trade area and this level of support within our order block as we were expecting. We're creating some consolidation here prior to the macro opening. I generally have noticed that consolidation before the macro often leads to an aggressive macro. If you're seeing price moving before the macro opens, you can generally find that the macro may consolidate. So this is good to see. A consolidation before the macro is just some confluence that we may actually get some movement, and then additional confluence is that we are at optimal trade entry within an hourly point of interest now, or a higher time frame point of interest being inside this order block. So we'll skip through into the macro. I'm just going to delete the fib just to try and tidy this chart up a little bit. We can see here that we've put in a low and we've taken this low on the euro. The same on the Dixie, we have not taken the high. So this is bullish SMT on the Dixie. I'm not taking this because I want to see a sweep of liquidity in the macro time. So this wasn't an entry for me. I'm looking for a sweep of liquidity with then bullish SMT and a large engulfing candle. So this wasn't an entry because this was put in prior to the macro opening. Displacement down, we've come into our fair value gap once again. So this is that hourly fair value gap, I believe it was, that was supporting price earlier. We do have those relative equal lows below us as well. That fair value gap has given us a nice reaction. And then what we're seeing at this point is euro failing to make new lows. Excuse me. Get rid of that. So again, we're looking for SMT. Euro's not making new lows here, whereas the Dixie again on these two candles did make a new high. It's only very micro, but we do have SMT at this point. And we've come into this key fair value gap hourly order block that we were looking at. We have two fair value gaps. Which potentially can get closed through. Likewise, we are looking at volume imbalances and fair value gaps on the Dixie as well. So we've got this large volume imbalance, and again, another volume imbalance here. So this is something that I'm monitoring as well. How is the Dixie reacting? So I'm not just looking at for engulfments and closures over fair value gaps on the euro. I want to see the same on Dixie to confirm the move. We'll get a strong reaction and the Dixie is able to close through both of its fair value gaps. The euro doesn't close through both of them. Now I took this as an entry because I saw the Dixie dropping and closing over both fair value gaps. Once it's closed over both of these fair value gaps / volume imbalances, I believe it will certainly run to this low. Which means I was confident, even though we were engulfing candle here over the first one into the second fair value gap, I was confident enough, based on the fact that the Dixie was closing over both, to take an entry on this first candle. This is an aggressive entry, but we are in an hourly point of interest. We've established that we've got a bullish bias. We've got a large engulfing candle with SMT. Dixie has closed over its inefficiencies now, so I believe the Dixie will drop to take out that level. We have this as our low-hanging fruit level of liquidity for a break even. So I took my entry at market as soon as we closed that, looking for 2R there. This second candle would have also been a valid entry. So we can see that we get a nice closure on this second candle also. So this would have been a valid closure for me. If you didn't take the first one, the second one definitely would be a valid entry. I did enter on this first one, just based on what I was seeing on the Dixie. You can see some pullback into the fair value gaps. So this is our inversion fair value gap. I'm going to remove that uppermost fair value gap. We've left the bullish fair value gap in this area. So we've just come back to retest the bullish fair value gap. This was concerning. We've created a new high here. We didn't create a new low on the Dixie, meaning we do have bearish SMT at this point. We'll come back into the inversion and then we get a strong reaction. So this is nice to see another engulfing candle closing over a bearish fair value gap. Dixie is now taking this low, whereas the euro has not. So again, we're kind of engineering bearish SMT here. So this is would be valid closing this again in a small profit. I did leave this one to run because I didn't want to do anything until we at least take this high. I was confident we would take that high. More consolidation. Here we can go break even. So we've now taken the high. Run our stop to break even. And hopefully now we're expecting displacement through the high. We've kind of retested the inversion fair value gap several times. We're now closing outside that range. So we're looking for continuations through the high, which we do begin to get. Momentum comes straight in. 2R is hit nicely. One of the theories that I work on is the fact that macros will seek other macros for liquidity. And so based on this, it could be reasonable to expect the high of the previous macro to get hit if you were going to hold runners. So obviously my trading plan is just to close out 2R in full. And so this was a nice 2R trade. However, moving forward, it may be beneficial just to hold runners. See how these plays. We get lovely displacement higher. We are into the second macro and then finding some resistance. Price consolidates. As I mentioned, I'm already closed out in full on this at 2R. Price is coming up higher. We're outside of the session now, so we do just get continued consolidation here. And when we get up to lifetime, I'm not sure where price is now as we are editing this. I've not looked at the charts for the last hour. Again, another displacement higher, so the order block is holding us up. Creating a lot of relative equal highs here. We do run those highs, and we are seeking that previous macro, so potential 4.6. And we do pip through that, so we have taken that previous macro high. 4.6R if you are going to leave runners. So an epic trade. We can see the difference between the two, in my opinion. Less than optimal trade, which did get stopped out break even because we were too high up in the range. We hadn't come back into a discount, and we weren't in an hourly point of interest. Second trade, much more textbook. Nice SMT, engulfing candle, specifically when we are looking at the way the Dixie, what is going on here? The way the Dixie reacted with the large engulfing candles over the two fair value gaps. And if you did want to hold runners, then potential 4 to 5R on that trade. So I hope that was useful. If you did enjoy the video, please be sure to give it a thumbs up. If you like seeing this content, then do consider subscribing. We've just cracked 3,000 subscribers, so I'm really pleased with that. The reception from my videos has been fantastic, considering I only started these as part of my journaling process. So I'm really pleased that so many people find this useful. And if you do, then do make sure you hit that subscribe button. It'd be fantastic to have you on board. And if you have any questions, comments, or feedback, just leave them down below. It's always great to hear from you. Thanks for watching, and hopefully I'll see you again in the next video.